Hey folks, Nathan Holman here, Maricopa County living with Coldwell Banker. I wanted to do a quick message here, and I'll put this down because it's distracting. I wanted to take a quick message here, or a moment for a quick message relative to selling your home. I get contacted every day relative to people thinking about selling their home. And in today's market, there's natural apprehension, right? And anxiety with COVID. Just as we're seeing across the industry, that we've got low inventory, and it doesn't matter pretty much what market you're in, whether it's local here in Arizona or elsewhere. It's the case right now that inventory is at its lowest. That is driven by one, people being apprehensive, and I'll get to that back to that in a second. But two, record demand fueled by record low interest rates, right? So cost of money is at its lowest pretty much in history. And what does that mean? It means that people are able to buy a lot more home now relative to the dollars of payment in terms of their monthly mortgage than what they previously did. Going back into the 80s, I think the interest rate was above 11, 12, 13%, right? So we're down to 2.7, which is quite frankly astounding, and it means that interest rates are it means that loan rates are incredibly low compared to the actual amount being lent and therefore borrowed. Okay, so back to selling your home. There are a lot of people out there that basically are in that position of anxiety, right? So, do they put the house on the market? I think ultimately it's fair to say that for the foreseeable future, at least, although we don't have a crystal ball, that interest rates are going to be low, right? As the market recovers, there's probably going to be less intervention by the Fed relative to the management of interest rate that basically fuels those cost of money situations. And ultimately, it's likely that interest rates will start going up as the economy goes back into recovery. So, what does this mean for you? It means that selling the home right now, assuming you want to get under another loan to then buy somewhere else, so whether you're trading up or you're actually trading down, okay, you may want to think about that. You know, do you hold off now for the future? And a marginal, even a very short change in the interest rate, whether it be like a quarter point or half point, that can have pretty significant life cycle cost in terms of your total payment that you made. You could be making a number of thousands more over the life cycle of a loan that you would not otherwise have to had you sold and remortgage for your next move at this lower interest rate than versus waiting for later. So that's my point there. I want you to think about that. So cost of money is definitely a factor right now, and I can definitely talk to more around that. And then equally, I'll see if I can get some analysis together relative to cost of money factors and what that means in terms of life cycle cost for the term of your mortgage, 30 years considered, and how that will actually impact you as a home seller and therefore buyer at the other end, assuming you will actually move on to your next move, whether it be downsizing or upsizing, whatever that is. Okay, so hopefully that makes sense. I'm going to talk more about that later, and get some analysis together for that for you all. So with that, I'm going to ring off. Definitely reach out to me with any questions. Hopefully that makes sense, and let's talk soon. Thank you. Be safe.